Welcome to our latest focusIR London South East September 2023 Town Hall meeting, where we collect your questions and put them to Shaun, Managing Director of Greatland Gold. This event is being broadcast live to several hundred GGP investors right now, which I have to say is quite something. Shaun doesn't really need an introduction, but perhaps our new name does. focusIR is the digital investor relations arm of London South East, and we work with companies like Greatland Gold, link them to their investor base, and provide them with strategic advice. And now, here we are. Here's the main man. Here's Shaun with a short slide presentation, followed by our live Q&A.
Thanks, Donald, and thanks, people, for tuning in. As Donald mentioned, I'll try to keep this presentation short so we have more time for the Q&A feature. In addition, I just presented a very similar slide deck to this at the Denver Gold Forum earlier this week, which should become available today. So I'll share that on social media for those interested to listen. Although I will kind of unpack a couple of slides here which are new for today. Just to begin, I'd just like to recognise our First Nations partners in Australia who we have a really important relationship with as part of developing our asset base. And also, it's important just to remind people that we are a gold copper company. Focus on gold, we're 80 to 75% gold. We really like the aspect of gold in the portfolio and the geopolitical situation globally and economic globally for gold. There's geopolitical uncertainty, Ukraine, Russia war, but also with the Chinese belligerence around Taiwan. That creates an environment which we think is supportive of gold. And then also as you move into an environment where we're seeing the quickest ramp up of interest rates in global history, arguably that wouldn't be supportive for gold. Now, as that's unwound, it becomes a really positive gold story. Copper, we love having copper at 20-25% of our portfolio and the diversification that provides, but also as a way to play the electrification market, we think copper is the preferred metal for that. Overall, I'll just remind people 8.5% Wyloo stake is our largest shareholder. And you would have seen last week, we really appreciate that relationship, and they came in with that $50 million debt facility. That's not convertible, but what it did, in addition to the 60 million we have in the bank, gave us additional funding flexibility. This is a revolver facility. We perhaps never draw it down, but what it does is gives the market confidence that we're fully funded out to that definitive feasibility study, and that will then allow us to put in place the longer dated 7-year project debt facility. When we look at the overall kind of investment thesis for Greatland, it's principally around we've got this high grade, high quality gold copper asset sitting in a tier 1 jurisdiction in Western Australia, coupled with it being next to existing infrastructure, that Telfer mine, which is coming to the end of its life, so expected to wind down in 2014. And again, Newcrest, the owner of Telfer, has really done a great job at expediting the development of Havieron to try to have a seamless transition from Telfer to Havieron ore. We've already identified 6.5 million ounces. There's a further 80,000 metres of growth drilling on top of that, which was really good intercepts, which gives us an opportunity to significantly increase that. And then coupled with that, we retained the upside exploration potential. We've added to that significantly over the last 6 months in the portfolio. And of course, we've invested in our team. I do like to continue to remind people and orientate around strategy. There's 3 horizons to that strategy: deliver an expanded Havieron, continue to invest in the drill bit, which you're going to see accelerate this year. And again, we're looking at financially disciplined opportunities for acquisition. The Rio Tinto exploration was an example of that, but we'll also look at broader opportunities as well. Look, given we're going to try to walk through this slide deck reasonably quickly, I won't take a lot of time on this slide, but it does set out what's been an incredibly high tempo corporate and operational environment for Greatland over the last 2 years in particular. During that time, we've brought in strategic equity holders. We've brought in a number of debt pieces to augment that. We've resolved the joint venture issue around the 5% acquisition value, and successfully so, which was a part of that joint venture that did need to be resolved. And also we're really proud of what we've been able to do on the exploration side of it with that Rio Tinto transaction, and very recently getting access onto the Wakamura tenements of Ernest Giles. That's been over 4 years to become the first group that successfully put in place a land access agreement. The team is a really important part of Greatland. I've been very fortunate in my career to being part of 3 very successful organisations before joining Greatland, and certainly a huge part of that success was the team we have in place. And at a board level, with Mark Barnabar as chair, Elizabeth Gaines as deputy chair, that is a formidable combination, together with a really strong group of directors. Across to the left of screen, you have the executive team. Jimmy Wilson sits there as an executive director, but sits on the board out of BHP, widely seen as the 2IC of BHP and the operational strength in that environment. And then a number of people I've worked with before over the years. Simon Tyrrell out of Northern Star has joined as Chief Operating Officer this year. Chris Toon, who I'd worked with before. And then we've got Matt Kwan, who went to Oxford, has a huge amount of joint venture and corporate legal experience as General Counsel, and Rowan Crownsoff leading a business development team out of Fortescue. So it's a formidable team, and I think for a company of this size, we are hugely fortunate. But that layer of management is also backed up by an incredible team beneath that, and we think we really have the spine for a organisation that can be a good owner of Havieron, but also potentially expand our role. This slide is really just to kind of put us in context. We think already we're kind of recognised as an important developer, but there's also, compared to the ASX peers, we think there's an opportunity for us to continue to walk value forward. And turning to the asset itself, look, that's just a shot there of the box cut that we put in place in February 2021, and then that leads into the decline ramp down to the top of the ore body. The decline continues to advance with over 2,800 metres of development. We're actually a little bit updated this. This was at September, but really now we are finished that 3rd spiral, and we're charging down at quite competent ground into that 4th spiral. So good development activity, and you can see the infrastructure that we want to put in place there down the side of that ore body and unlock that reserve, which principally sits within the southeast crescent. Turning to the resource and reserve, it's a 6.5 million ounce resource, and again centered around that blue with the additional inferred material sitting to the right of screen. And really that's a function of drill density. As we continue to add drill density, particularly at the lower areas of the ore body, there's the opportunity to significantly upgrade and optimise that mine plan. And it presently has about 2.9 million ounces of gold copper equivalent. depending on your price deck for copper conversion, that probably sits closer to 3 million ounces today. Again, this is one of my favourite slides, as people know, or at least understanding ounces per vertical metre, I think is hugely important to understanding a underground ore body. 8,500 ounces or over 8,000 ounces through that top 400 or 500 metres of the ore body is extraordinary. And again, this is over a short strike length. It's a reasonably compact ore body at 650 to 600 metres. Coupled, so you're putting in a single decline and for every metre of vertical development, you're able to access over 8,000 ounces of gold. That drives a low capex, a low intensity per ounce, but also, given the compact nature of this ore body and just its mining shape, sub-vertical and compact allows big mining stopes, which then leads to a low cost of mining and in turn a low all-in sustaining cost, which at the PFS was sitting at US $643 an ounce, certainly in the lowest quartile of producers. And that on the y-axis there, you see the stacked bar chart. The grey is where we've already done drilling. The green is the additional drilling we get to add to that when we update the mineral resource estimate, the MRE. And again, you see the centre of gravity that is a little bit more this time skewed towards the lower half of the ore body. So it will get a more increasingly vertical line and a more consistent profile of ounces per vertical metre, which I think reacts to the reality of that mine. But of course, you start drilling these from the top. Again, this just kind of looks down in plan at the mine site. A lot of the focus to date is on that southeast crescent that underwrites the infrastructure to get down into the ore body. And then we have the opportunity to take out the bulk areas of the northern breccia and the eastern breccia. What's great about both of these is we're really attracted to a bulk mining methodology. Remember, with the installed capacity at Telfer, we're really not mine constrained, which minimises the capex profile to bring a bulk mine into production. But also you've got these high-grade pods, particularly through that northern breccia, whilst you've got a reasonably kind of more consistent profile through that eastern breccia. But you do see mines in Australia where they just drive into them and take out the high grade areas. It's good to have flexibility. I'm attracted to the kind of more bulk approach, but it's nice to have the flexibility that gives us multiple ways to solve the multi-decade life for Havieron. And I mentioned earlier around our strategy, which includes investing in the drill bit and continuing to do exploration. That's the DNA of Greatland, and obviously hugely successful with the discovery of Havieron. We like to think we now hold the best underexplored tenement package in the Paterson. Great credit to Rio Tinto, who's done a huge amount of geophysical work across this platform. And we're really looking to, as part of the partnership or the earn-in with Rio Tinto, now get through the business of drilling multiple targets, and there are dozens and dozens of high-grade targets across this portfolio. And we're really excited. The geology team was hugely excited, as people are aware. After signing this joint venture, we managed to mobilise a rig safely and efficiently within 4 weeks. And I think that reflects the opportunity ahead of us and the enthusiasm the geology team has for the task. In keeping with having mobilised so efficiently, we've already completed phase 1 of that earn-in. It's a standard 3-phase earn-in, but ultimately we will own 75% of these assets within 7 years, and Rio Tinto will retain a 25% stake. We just to update people, we drilled the Stingray and the Decker targets, both high-quality targets, confluences of magnetics, EM, and changes in the gravity gradient. These are very much the same confluence of geophysical features that attracted us to Havieron. So they have been drilled. There is a process to then get the core cut and transported back to Perth for analysis and assay. So that is underway, and I expect we'll have assays coming out certainly early in the December quarter, which is close to hand. And we're excited about that. But again, we did a limited number of holes. It's a very technically driven approach where we try to drill in, compare to what we're expecting, recalibrate, better understand the stratigraphy, and continue to refine the drilling program. This is a new slide, which is Ernst Giles. As I mentioned, we were the first mining group to actually successfully achieve a land access agreement with the Wakamura Aboriginal Corporation since the determination that they had an interest in that land package, or we really regard them as owners. So look, really delighted to have completed that land access agreement. It predates me, the negotiations with the Wakamura, and just delighted. And I think the approach that we've both taken to achieve access there is tremendous. Historically, geophysical work has been undertaken across this package, so we have some walk-up targets that we're very keen to drill. This, just to remind people, is an Archean greenstone, the most abundant source of gold in Australia, and certainly in Western Australia. The super pit is a Archean greenstone, most famously. Archean greenstones are tightly held. This was undercover, so not really recognised as an Archean greenstone. So now we have the opportunity to come in on that site and undertake drilling. Really excited about that, and again, in keeping with our competitive advantage through the Patterson of looking through cover, I think we have a team that's really well placed to take advantage of the Ernst Giles holdings. Otherwise, we continue to have a package there, Panorama, Bromus, and most recently we've added Yannery. Very excited about Yannery. It really stood out on a heat map that our geology team had put together around opportunities within the state of Western Australia. So it's a good addition, and we like to be active managers of our exploration portfolio. So with that, I'd just like to say thank you and pass across for Donald for questions.
Okay, Shaun, thank you. That was absolutely terrific and very short and to the point as well. I was expecting a lot of slides that I'd seen before, but that all seemed pretty new to me. Fantastic. Thank you so much. Now, I think we should start at the start today, and let's go holistic. Mining giant Newmont are taking over Greatland's JV partner Newcrest. What are the implications for Greatland's 30% stake in Havieron, and indeed for Telfer? So what are the different ways that this might play out, Shaun? Let's start you big and strategic.
Donald, you have started big. Thank you. Look, it is a really interesting, strategically interesting time for Greatland. And the way I often describe this is the option value around Greatland, I think, is really significant and perhaps not fully appreciated in the market. Look, we value the relationship with Newcrest. That is ongoing. But what we now have is a timetable for transaction. So on the 13th of October is the Newcrest shareholder vote. At that time, the transaction, for all intents and purposes, is certain to complete and brings to a close that chapter. I think the actual implementation date is the 6th of November when Newmont takes the keys, so to speak. But really from that 13th of October, the die is cast. So it's certainly expected, to my mind, that this transaction is recommended by Newcrest and of course Newmont, that it will pass. And look, we do celebrate that. I think Newmont coming in is a really good opportunity for us. I think they are seen globally as best of breed in the gold mining space. So we think they are additive to the Havieron development and platform. I think if we think about this more broadly, and at the Denver Gold Forum, I did get a chance to watch the Newmont presentation, and they have a great slide where 10 of the world's 15th largest gold projects will be owned by that combined Newmont portfolio. And that really is their tier one holdings which are all top 15 gold mines on the planet. So it is going to be an amazing vehicle, and we celebrate that for Newmont. And then it's a question as to what is the opportunity for us? I think our base case is, we certainly see the attraction of Havieron, lowest quartile cost, sitting in a tier one jurisdiction in a country, Australia, where they already operate and will run 3 of the 4 largest assets in Australia. So there's a lot of reasons why they will fall in love with the asset, and we think that would be an amazing reflection on the quality of Havieron if the world's largest gold miner, a gold miner that says there will be some rationalisation in that combined portfolio, chooses to want to continue to hold Havieron. Equally, they may decide they are going to do some divestments. And if they did choose to do that, I think we want to present ourselves, and I think hopefully successfully so, as a really credible counterparty. And that has been around building a team and a board to transact with a Newmont, but also the financial credibility, particularly delivered by having Wyloo as a strategic holder, and the slow process of increasing the institutional holding in our share register. And of course, we also hold the last right of refusal across the asset itself. So I think there's plenty of opportunity there. I think all are good outcomes. I think Newmont will be decisive, but the development, importantly, of Havieron will continue unimpeded, regardless of whether it's Newcrest, Newmont, or Greatland, or what combination there is of these groups. It's a tremendous asset, and I think it will continue to process forward, but there's option value around that for now.
Okay, on to the next question from Yvonne Thompson. If the price were right, might you consider selling the 30% stake in Havieron to Newmont, if they were to fall in love with it, as you said, and go back to being a well-funded Patterson explorer? What's your thoughts on that?
Well, look, we're driven by shareholder value. That's our focus. I'll mention briefly that we, as a management team, we aligned ourselves with the package previously given to the board, which were significantly out of the money options. But I think that is a statement of intent a little bit for the company about creation of shareholder value. So that's our focus. And yes, of course, if someone wanted to de-risk the returns of running the asset for multiple decades and provide that up front, we would of course consider that. Having said that, I joined, and the team we've put together is really designed around delivering a operational Havieron and optimizing that project. That is our intent. That's what gets us excited in the morning. We love the exploration as well, and as you can see, we've invested and will continue to invest and expand and optimize that portfolio. But all opportunities are possible, but we certainly have the ability and the appetite to be operators of Havieron as well.
Okay, a little bit more detailed, the next question from both from Chris Thompson and Tibor Zolnowski. Do you have a view on whether Newmont will want to keep Havieron and the Telfer infrastructure, so both parts which fit with one another? And have you had any discussions with them? Now, I can see that the line questions coming in are asking similar things. So over to you, Shaun, on that one.
Yeah, look, thanks, Chris and others for the question. Look, I probably see Havieron and Telfer as two sides of the same coin. There's a lot of reasons why they're really good to integrate, and that was really the original concept behind the joint venture with Newcrest. Is you've got established infrastructure that happens to be in the middle of a wind down, and then just as Havieron comes online, and I think I've talked about almost the Goldilocks zone, where we weren't too early and we sat kind of sequence behind Telfer ore, and we weren't too late when Havieron, Telfer had already shut down. We've kind of just come right on time to be the replacement ore feed. And it's not just the processing plant. There's a bitumen airstrip or weather airstrip. There's storage. There's critical spares. There's power generation. Offices and accommodation. So being able to utilize that infrastructure is hugely advantageous rather than kind of going into a greenfield site. So effectively, I think it makes sense to keep the two together. I think that is the way Newcrest has always approached it. It's the way we've always approached it. My sense is that will be the way Newmont approaches it, but we don't know the mind of Newmont. I have dealt with Newmont previously in a separate life, but equally, I think we all understand that Newmont's immediate task is to complete the $20 billion transaction with Newcrest before they start kind of thinking about what to do next. It's a little bit like a football, catch it before you, or at least receive the pass before you start working out how you're going to spend it.
And it would be too soon to have had a brief chat with Newmont about this, would it?
I think
other things.
It's fair to say their focus would be getting the $20 billion task done, and that's a little bit my football analogy, that I think they'll receive the pass before they start thinking about what they're going to do with the ball.
They want to put the ball in the back of the net, perhaps, Shaun, before they actually decide what to do next. I
think that's true.
Fair enough. With Wyloo's backing, would there ever be a possibility of buying the 70% stake in Havieron? The dream big thought, if Newmont prefer to focus on other parts of, as you've said, the world-class portfolio. You outlined how extraordinary their portfolio is. So say they weren't to go for Havieron, who wouldn't want to buy Havieron? But would you go for the 70%?
Well, look, I think when you put together two of the global majors, there's only good assets. And remember, Newcrest, although it was a global major and a tremendous platform, it's only 5 assets. It doesn't have this huge tail of 42 operations. It is a compact company in many respects. So there's only good assets in Newmont. I think I talked earlier in this Q&A around we want to present ourselves as a credible counterparty, whether that be as part of a joint venture with Newmont to optimise the Havieron Telfer development, or if they chose to exit, being a credible counterparty from a team, from a financial, and of course within the structure of the joint venture itself. So look, we think we cover both bases, and we think we've been mindful of that over the last couple of years as we've built out the Greatland platform.
Okay, this next question comes from one of our regulars, Dipsard. It looks likely that the Havieron definitive feasibility study won't be due until early 2024, with Newmont expected to announce plans to optimise its portfolio in early February. I don't know where these investors get these information from, but it is extraordinary and might even be true. Would you expect NCM to release a DFS before or after this? So
thanks, Dipsard. I think I'm confident in saying that Newcrest won't be releasing a definitive feasibility study before the completion of the transaction with Newmont. So let's call that the 6th of November. So I think a first half of 2024 date is sensible. Presumably, Newmont would like to understand that, review the optimization work that is being done before they finalize that document. Having said that, we reached the top of the ore body, or scheduled to reach that in the June quarter of 2024. And then you'd expect the feasibility study to be in the market and finalised for, or if not ahead of that date, so that we've agreed the mine development plan as we then start setting up the level developments and the stopes and the decline down that side of the ore body, as we saw in one of the earlier slides.
Okay. Let's give you a simple question about the independent MRE that you said you were going to publish. What update can you give on progress, and did NCM take up your offer of being involved in the peer review?
So that we continue to work on that technically. We will, so at the right time, once that work is, we think in more of a final draft form, we would share that with them. And who knows, that might kind of enter around that transition with the Newmont ownership. So yeah, this is a slightly more complex period than it was in March 2022 when I think we last independently released a MRE. That said, we're committed to getting the work done. We continue to walk that forward. I'd like to achieve that December quarter timetable that we set for ourselves. I might just add that we will be mindful of we value the relationship with Newcrest and Newmont. It's always been our preference to release resources and reserve updates with the partner. So if Newmont does come in, I think we would want to continue to give them that same opportunity for peer review. But that work is being undertaken both internally. We'll also get it externally reviewed for confirmation. And of course, my expectation is our joint venture partner would also want a peer review, and we would appreciate and want that to happen.
Someone on the board, I was reading on the GGP board yesterday, someone described you as a superb chess player, Shaun. I think that answer is just an illustration of you being good at chess.
Well, thanks, Donald. It's certainly been a really interesting strategic period, really since about late 2021 to this time, and it will be certainly fascinating had you told me when I joined that we were going to outlast Newcrest. So it has been a evolving environment throughout, but it's something that we've enjoyed the challenge of, and hopefully people appreciate the progress we've made over that last 2 years. Sometimes in a challenging environment, but I think we've made the most of it. So yeah, we're really proud of the team that we've put together and the work that they've achieved.
Yes, most people do appreciate it, and all the messages that we're getting in here at the moment, a few of them take the time to say thank you. I never include the thanks, but they all say thank you and they appreciate the communications that you provide them with. So anyway, let's talk the delayed ASX listing. This one from Andy Cochran, James Carson, and David Womack. There you go. There's a name check for 3 people. When might the delayed ASX listing happen, do you think? Will the internal restructuring continue? And what would a fair ASX listing price be?
Yeah, look, when it comes to the ASX listing, I think what I want to kind of say is that our primary thought process is around what's in the interest of existing shareholders. And there's a great Winston Churchill quote about, when the facts change, I change my mind, what do you do? And we just felt the circumstances in the market had moved, and perhaps that's because of some pretty unhelpful media speculation around a capital raising, which was not necessarily the intent. So we just felt it wasn't the right time to undertake an ASX listing. We want to do that around creating value and augmenting value for our existing shareholder base. So really the purpose of that announcement was to give people comfort and perhaps remove a perception of an overhang. Whether that was correct or incorrect, it was the perception that we wanted to address. And again, super appreciate the support of Wailu. It's great to have a supportive strategic holder. It's even better when that's an extraordinarily well-funded group. So they were able to bring in what we thought was a really helpful $50 million debt facility. There's no dilution as part of that. And what that did was enabled us to articulate to the market, we have $110 million available to us. Historically at our expenditure rate, that gives us a burn profile deep, well past any kind of contemplation we have around completing the decline. And I think with that in place, it gave the market confidence that an equity raising was not necessarily required. So I think that's how we thought about it. We're going to continue to work with the ASX. finalise that option. We still think in the medium to long term that's in the interest of shareholders. We've done some work. We'll continue to take advantage of that and complete the process, but we'll look to be opportunistic. So I don't want to put a time frame and set an expectation, but I think we would continue to consider that if we felt it was in the interest of shareholders. And I think the answer is when, because over time, and we did have that slide earlier in the presentation around the peer group, over time, we do think the ASX augments the platform that we have in London here. And further, there's a number of Australian funds that are ASX mandate locked. They buy a number of our peer group, but they can't buy us because we're not on the ASX exchange. That's what their mandate allows them to buy. They can come and buy that stock in London, so long as we have some link to the ASX. So we still believe this is the right path, but just deciding on that timing.
And broadly, what are your thoughts on the timing? Very roughly?
Well, I think what I'm trying to do, Donald, if I'm open, is just not create a market expectation on timing. I think what I'm really trying to do is say we're preserving the option and we'll look to do that at the right time. And going back to my Churchill quote, I think it's about timing the market.
No problem.
And so I don't want to put parameters and create an expectation. What I want to be able to do is say, we now think it's the right time and we've done our homework, we're ready to go. We can do this in short order from this. And I think it's been important, the journey we've been on. I think creating that expectation, being informative with shareholders around how we think of it, I think sets us up to have support to execute that ASX cross-listing when the opportunity arises.
Okay, moving on. What do you think the relationship with Newmont will look like, Shaun?
I think it will be a tremendous relationship.
New boss.
Yeah, look, I've dealt with Newmont a couple of times previously. Simon, our new Chief Operating Officer, has worked with Newmont previously, also in terms of our Northern Star experience. So I think we have a somewhat a measure for that organisation. It's hugely impressive, as you'd expect from the world's largest gold miner. We have a huge respect for what they've achieved, but also their culture. And I think that's hugely important. We value culture at Greatland. It's probably our driving focus about how we think about team composition, how we conduct ourselves. And I think we share some of those same values with Newmont. So we think the alignment there is really good. And look, I'd be delighted if we have a multi-decade partnership with Newmont. There's different ways strategically the options can play out around this, but this is a world-class team, a world-class operator, and world-class people that we're really excited about working with. So make no mistake, we're pleased.
Alan Bauer and others have asked us to ask you about the feasibility study. Give us a broad outline of what will be included in the feasibility study.
Look, if you have a look back to the pre-feasibility study, that was finalised around a 2 million tonne run rate. And in that, we talked about the preferred model moving forward is around a 3 million tonne run rate. That would be my expectation. It will be certainly north of 2 million tonnes and centred around a 3 million tonne per annum run rate. And a lot of the work around the decline is centred around creating the overtaking bays, the stockpile bays, to allow the modelling to deliver something around that 3 million tonne. So when you see the overall metres developed, and then you see the actual vertical distance covered, the delta there, or the reason there's so much more metres developed, is we are making so many overtaking bays, so many opportunities for passing bays, which allows for a more productive decline. So that's been really important part of the mine planning. And then looking at optimizations around that as well, looking at recoveries, looking at what can be done to that processing plant, thinking about the amount of evaporation needed to manage the water balance, the size of the paste fill plant, the haulage route, all these things to try to bring things forward, and then optimizing the mine plan. And although we did 80,000 metres of growth drilling, there was also a lot of infill drilling to try to give more confidence to that mine plan and bring some more material into that mine plan. But the PFS, in some ways, was hugely successful because, from memory, I think it was 1.4 million tonnes of reserves, and that covered all the infrastructure being put in. So this is a little bit like an infrastructure asset from here. Once you've put the pipes in, once you've built your highway or built your electricity grid, if you can put more down that utility, that marginal material just adds to the profitability. And that's what you've got a little bit here. We've already paid the cost in the PFS of putting the infrastructure in place. Now we have an expanded mine plan to bring into the feasibility study, which just increases the efficiency and the cash profile that infrastructure cost will can bear. So I think it's, I think we continue to be really pleased with how the physical ore body of Havieron evolves.
Okay. Let me ask you a direct question, Shaun. When will the decision to mine be? And what are the thinking that goes around that?
There's a very structured element to the joint venture agreement where within a short time period of finalisation of the feasibility study, the partners decide to or make the formal investment decision. That's a catalyst. If one party wanted to exit or didn't agree with the development, there's an opportunity to consolidate ownership. That would be highly unlikely. We wouldn't be that lucky. It's fundamentally, so I think it's really just a question. It will be in short order after the feasibility study, which we'd expect in the first half of calendar 2024. Of course, the overlay there, and part of the reason why I think Newcrest is hesitant to put a date around that is it may not be a Newcrest brand on the feasibility study. So Newmont will have its own pathway internally for finalising a study. I think that will be additive, but fundamentally that is the pathway. But of course, everyone, Newmont included, will want to have that study published by the time we reach the top of the actual ore body itself and have punched through that Permian zone.
Wow, that was a very interesting answer, Shaun. Thank you. Let's talk exploration. We can sort of roll Yannery and Ernest Giles in together if you wish. But you've always been a fan of Ernest Giles. You've just managed to sign the Ernest Giles land agreement. What's next there? And John Collins asks, why do you like Ernest Giles? Why do you like those tenements so much?
Look, I think coupled with the Patterson, which has proven success, we love that location. I think there's a lot of reason to really like Ernest Giles as well. I've mentioned this is Archean Greenstone. That is associated with the majority of gold discoveries in Western Australia. They have been really fertile across Western Australia. Where they've been located, they are typically tightly held and they're drilled out like pin cushions. This wasn't really understood to be an Archean Greenstone. We managed to identify that. We managed to peg it. Then there's the question of getting the land access agreement. So this has been a somewhat long journey, but we really like it. And much like the Patterson, it's undercover. And cover's your friend. If this was outcropping at surface, it would have already been picked over. People would have already looked at it. It would have been drilled. It would be understood. But because it's undercover, applying modern geophysical and geological techniques allow us to peer through that cover better than ever before and have a better probability of success. And that's really what our team has been built around because of the cover sequence that you have through the Patterson. So we feel this is consistent with our competitive advantage. It's a really fertile rock type. And then plus, because historically we've done some geophysical targets, we know it lights up like a Christmas tree. We know we have some tier 1 targets. And again, I don't want to be definitive, but we took 4 weeks to mobilise a rig to get onto that South Patterson Rio Tinto joint venture. I'd expect from here it will be a similarly quick time. Safety will be our priority, and we'll need to work really hard to efficiently get a rig out there. But I think you'll find the geo team or the exploration team is already working very hard and has already warmed up contractors to be able to mobilise there in short order. It's good ground. We're excited about it.
Okay. An associated question from Mike Harbour. He says there's a Western Australian grant connected with drilling Ernest Giles, the deadline for which is 30th of November 2023. Are you able to mobilise rigs to get the work done in time, or can you apply for an extension? I think the detail with which people study Greatland Gold is quite extraordinary, Shaun, and this is another example of it.
Yeah, John is correct. There is an EIS, WA government, West Australian government grant for us for part of the drilling costs on Ernest Giles. We do want to take advantage of that. That was something that we were able to kind of achieve in terms of the timing with the Wakamura, and we really appreciate them working with us to achieve that time frame. Again, I can't be definitive, but we'd like to think, and we're certainly planning to achieve the drilling in the time frame to receive the EIS funding. For good order, it is not unusual to be able to roll that over, but I can't say that with certainty. Fundamentally, it's a separate application each year, which will be assessed on the merits, and there are lots of applications. So there is, even if your application had merit the year before, it can be, it's where it's ranked. So although we are confident it would be renewed next year, we can't be certain. We'd like to take the guesswork out of it and just mobilise a rig in short order, and that is our intent. I'll be more decisive on that when we finalise it. And again, although we're really driven by that, we'll continue to value safety. That will be our primary responsibility. It is a remote area, and we will work through our safety and our risk assessments in terms of mobilising that team.
Okay, you talked about Wyloo providing Greatland with a 50 million Aussie dollars lending facility. So you've answered that part of the question. Do you have any significant cash calls coming up? And how do you see the Wyloo relationship working going forwards? I mean, that really strategically is a fascinating question.
Look, it's somewhat steady as it goes. There's two parts to that question. It's steady as it goes in terms of the joint venture. So we're really comfortable around. There's no surprises to our expectations around cash calls. So I think it's always good, and indeed the budget is prepared prior to the financial year, and that gives us a certainty around cash calls. So we're reasonably confident around that profile. The relationship with Wyloo, we value it. It's warm. They're supportive. We don't think we can think of a better relationship cornerstone investor. We really respect them. They've got a dedicated mining team with expertise around geology and mining and other skill sets within that organisation. So we think they're a really well-informed investor and a patient investor to help us unlock value. And they want to create value for their own portfolio. So we think there's lovely alignment there. We certainly think very highly of the Wyloo team.
Okay. Lots of people want to know when the assays from Scallywag and Rio might be released. There's lots and lots of people who've asked that same question. So I'll just bundle them all into the one question.
Yeah, it's a great question. Look, it was really around the logistics of, again, getting the core taken back, and we don't tend to take core in individual trips. We tend to kind of bundle it together. We cut it, then we get it, transport it, the relevant portion down to Perth for cutting. So a number of those steps have been completed. Assay timeframes are much improved than what they were, say, 12 months ago, and we had that long period where there were big backlogs in assay. So to my understanding, assay times are become more normalised again. So if that's the case, you'd expect those to be available early in the December quarter. So not particularly far away, but we don't, just to be clear, we don't have the assays yet. We're looking forward to receiving them, but it should be a relatively short burn from here.
Okay, I've gathered together a few share price questions. There'll be no surprises to you, Shaun, that there are several and they take different forms. So here we go. I buried them deep into the list of questions, but we have to talk about share price at some point. So here we are. Adrian Lowe, Anthony Latimer, Chris Jones ask, why do you think there's a Havieron-sized gulf between the quality of your assets and the share price? One is not reflective of the other, and also a different take on the same thing. Can you give your view on the falling share price and what's behind it?
Look, I'm somewhat restricted around what I can practically say around share price or future direction of share price, but I think I'll make 2 points around that. Firstly, look, we think the Havieron project continues to improve and expand. I think the drilling that we've done over the past 18 months continues to be, top draw. We continue to de-risk Havieron in terms of, we're really pleased to get through that third spiral and indeed the second aquifer, which is just porous rock. So when people think about aquifers, they shouldn't think of flowing rivers or anything. They should really just think of really porous rocks, which have a higher water content than the surrounding rock. So we think that's an important de-risking. And also just the time in terms of the closer we get down to the bottom of the ore body, that is clearly advantageous in terms of the development. No mining process is linear. So with every metre we tick off, that again is a de-risking exercise. I think also overlaying that, there has been, we spoke, I think the first question was around the strategic environment. The market loves certainty. That's something we probably haven't been able to provide that year in terms of, for much of this year, around who our joint venture partner is, what is their intent. So I do feel this 13 October vote gives us a level of stability. And, we asked before around the ASX listing and that Wyloo facility. Again, it was our attempt to try to add stability to the market by saying, look, there's uncertainty around the ASX. Let's take that off the table. There's a suspicion in the newspaper that we're going to raise equity. Let's take that off the table, and let's do that by bringing in a Wyloo loan, which is not dilutive, and give people comfort on that. So, we like to think we've taken some steps, but I'm sure 13th of October will be a red letter day in terms of the market feeling like we've closed a chapter of uncertainty.
Okay, 13th of October, let's all put that in the diary. And whilst we're talking shares, Eddie Davis asks the perennial question, why have you not bought substantial shares in Greatland Gold given that they're cheap?
Well, look, there's two parts. I have bought shares during the journey. I do typically buy kind of I only buy when we're allowed. That's, been a couple of equity raisings where I've been able to participate. There are long close periods, and then even once a close period, we have a certain cooling off period. And then also there are statutory close periods in the UK, a little bit different to Australia, where I think it's 30 days before financial statements, you're not allowed to buy or sell. So, they are tight windows. That said, I think, there are people within the organisation who I think would be interested if an opportunity arises. But to be clear, I have invested my own money over the journey.
Okay. James Carson asks the question, he says Alex Borelli had 14 million share options at 0.28 pence due to expire on the 18th of July this year. Is there an ongoing blackout period, or did Alex decide not to exercise his options?
There was an ongoing blackout period. And my understanding of, I'm not sure if these are LSE rules or just common rules to all option schemes up here, is that if the company is in a blackout period, rather than simply losing those options, they're rolled forward until the expiry of that blackout period. That's a little bit different to Australia. In Australia, there are carve-outs around issuing equity and disposing of equity around kind of blackout periods. But London is a more structured in terms of some of these things. So I think what I can say is those options have not expired. I think some of those options are the end of those old series that were done, obviously at really attractive pricing.
Okay. The employee share incentives were announced recently, and it's fair to say that not everyone was happy. Here's Dipsard, who takes a balanced view. He says the recent employee share incentives are well-deserved, given the challenges faced to date. So will you be setting specific KPIs for staff, such as how much institutional share ownership increases, for example? That said, I think just matching or exceeding GDXJ performance is perhaps a bit of a soft target, so a lesser weighting might have been more apt, perhaps 5%. And that was backed up by David Winton, who concurs, saying, have you misread the mood of long-term shareholders in offering over-generous incentives, given the very poor share price performance? There you go. That's one for you, Shaun.
Yeah, look, there's a little bit to unpack. I'm glad you raised it, because I did want to talk about it. I think firstly, let's talk about the target against in the specific questions, and then I'll move to I might start at the broad, and then we'll move to the specificity of the question. So look, we felt an incentive plan was really important. We didn't provide an incentive plan for all of FY23, which was not our intent. Be open. It's meant to be an annual plan, albeit there are only periods when we can issue them, but there is a really big one-off component. Most of this, which is the options, are one-off in nature. And what we've done there is there's really 4 elements to that planning. One, it's a super competitive environment in Australian, but particularly in West Australian mining. It's difficult to attract good people, and I think we've been able to do so. I like to think that reflects our culture. It certainly reflects the quality of the asset, but make no mistake, it is a really competitive environment. Secondly, the out of the money options, and it's meaningfully out of the money, gives us alignment with shareholders. We also aligned it with the previous board issue, so effectively you've got alignment with management and those directors that came in. Thirdly, it's non-cash consideration, which we think is important and to some extent save the company money in terms of the packages we were able to put to people. And finally, we wanted to anchor people in. We wanted to effectively lock people in to deliver Havieron. And that's really important. Like that is the cornerstone of our value. And we think this is something that we need the right team to do. Who knows how the environment evolves, but I think locking in that team for a period of time and giving us stability is a really important element. And the final element I would say is we do have 5 billion shares on issue. So the number of shares as opposed to the percentage of the company does look a bit larger than if we were, I think, a more usual number of shares in the Australian market would be, say, sub 500 million. So you'd kind of take a 0 off the number. And I think that does colour perception, even though the percentages are the same, based on the denominator being the number of shares on issue. If I go into the specificality of that question, I actually really have some sympathy for that view. There is different ways of governance. Previously and historically, what I saw early in my career is that things were based on absolute return. If the share price goes up, shareholders win, you win, there's alignment. Where governance has evolved, rightly or wrongly, is to put in benchmarks. And this means that if the gold price goes up and all your peer group goes up, you may not actually get a tick in your share price improvement because you actually need to outperform your peer group. Similarly though, and I think this was the nub of the question, if the gold price goes down and your peer group goes down, but you outperform your peer group, that outperformance is recognised. Now, beauty is a little bit in the eye of the beholder on that, but I probably have some sympathy for that view expressed, that they'd rather on absolute returns. Although the intent of modern governance, and I certainly understand it, is to incentivize and reward outperformance compared to the sector average. So almost normalizing for your underlying commodity price. I think each person can have a different view on that. I certainly understand both. Have a little bit of sympathy, truth be said, for the views expressed there. But I'm really comfortable with the approach the board and the remuneration committee, with the engagement and support of management, ultimately took. But I believe that is, if you have a look at a Glass Lewis or a ISC who write governance reports on us, this is a structure that they prefer, this relative to peer group.
Okay, moving on. Back to more general questions. James Carson asks, can you please provide an update on the Environmental Protection Authority public consultation, which closed in May, or give indicative timescales on this process?
Hi James, good question. He's correct, it was submitted. I'm always hesitant to put timeframes on government departments. I suspect the UK is not dissimilar to Australia in that regard. They do a heck of a job. I think we're justifiably really proud of the governance in Australia, the Westminster system. I think the EPA and our environmental protection standards in Australia are first rate, and that is admirable, and something certainly the company wants to achieve and indeed exceed those benchmarks. Having said that, it takes the time it takes. It's not on the critical path. I am a little bit optimistic about kind of the time frame and when that comes out, but we've kind of made a point on not trying to create an expectation on a date in the market. If it became on the critical path, I think that's when we'd have to start communicating it, but we're not close to that. So we feel the application was lodged in time to have the contingency for the EPA to work through it. We understand they've done some work. We've seen some questions and the Q&A iterative process kind of play out. We believe it's substantially, or is rather, on track, and substantially on track from a timetable, but certainly not in the critical path where it starts holding things up. So positive, but we will wait patiently for the ultimate determination process.
Shaun, we find ourselves out of time. Do you want to squeeze in another question or two before we say goodbye?
Look, I think the shareholders really value the Q&A. It's certainly the focus for me. So if you've got a couple more questions, certainly from my perspective.
I've got far more than a couple. Let's try this one from Jackie Woods. In the recent GGP environmental submission, an electric winder and ore hole lifting shaft were mentioned at Havieron. Can you elaborate on what these imply? So what lies behind those two things? So
look, if we hark back to the PFS, we looked at three forms of ore transport, which was the decline ramp, a conveyor, and a shaft haulage mechanism. All three were considered. They continue to be in consideration, and I don't want to preempt the feasibility study where that's going. Although I equally don't want to create an expectation where there shouldn't be. I think it would be natural to at least explore all three with the EPA as whilst you're finalising the definitive feasibility study, and provide optionality. But I think prima facie people should centre on that the decline, the truck haulage decline, but you would always preserve optionality. And if at a future date, or indeed at the date of the DFS, if you decided you could improve, you'd obviously want to be able to do that and anticipate that in your EPA. But I don't think people should be reading into that, other than it's just good practice to maintain optionality through these processes. Okay. I thought we'd asked all the possible permutations of the Newmont takeover, but Colin Moore has come up with a good one. Shaun, if Newmont were to renew its interest in Ernest Giles and propose a JV with Greatland Gold prior to making any decision regarding the future of Telfer Havieron, would you go for it? Well, look, we really prize the Ernest Giles ground. I think never say never. I spoke at length about how we value the relationship with Newmont and the quality of that organisation. So, of course, we would be open to discussions, but I think my instinctive answer is we now have a capability and a platform that can unlock the value there at Ernst Giles. So prima facie, we would like to do that and keep the benefit for our shareholders, albeit if Newmont could articulate an information approach, a methodology that we thought increased the probability of success for both partners, we'd obviously consider it. So it's prima facie, I think people should should see our thought process as wanting to keep all of it, but we're always open to good ideas.
Okay. I think this makes let's go. Stuart Hines, Ruddle Tenement. Let's quickly answer this one. Given that the drilling intercepted great mineralization, are you retaining the land at Ruddle? And if so, why, given that it's so deep?
Rudel. Yeah, look, good question.
Sorry.
That's right, Donald. The Australian names are not always self-evident. Stuart, I think is based out there in the Patterson. So I see his work on LinkedIn. And Twitter or X. So look, the 800-meter deep hole we thought was a really interesting intercept. At the bottom of that hole really came the high grade intercept, as is typical with that Havron, with that Patterson ore. You can't necessarily tell just by looking at it. So it was really only the assays that we really understood the grade we were seeing. I think what's interesting there is where that structure goes from. So we'd like to do some more geophysics on that, particularly to the extent we've got that hole is open. And if that structure was trending towards surface, I think that would be greatly more interesting to us than if that structure was heading further at further depth. So I think that's the way we think about it for now. Again, I've talked about our technical approach to drilling. We like to close out targets before closing the book on them. So we would probably still like to understand whether that structure and those high grades actually do go towards surface, because if they do go towards surface, that's when Rudel would become certainly of interest to us.
Okay, so time for our last question. And just before then, it's time to say that we did a brief poll on Zoom. And of those watching on Zoom, which is about 300 people currently, 97% are shareholders. I remember someone in GGP said to us once, so are these, who's actually watching here? Are these people actually shareholders? 97% of the people watching on Zoom today are shareholders. And I just thought, what a great last question from Stephen Weller. Where do you see Greatland Gold in 10 years, Shaun? Last question.
So, Donald, thanks for those statistics. Obviously, we're focused on the 97% of who are shareholders, but hopefully we've converted another 3% of the audience to become shareholders of Greatland. Stephen, was a great question around the vision, and I think about it in the context of my own experience. Sakari, Straits, Northern Star really were single asset platforms, and we grew them over a period of years to being multi-asset, multi-billion-dollar platforms. That's what we want to achieve here. We think Havieron gives us a tremendous platform, a tremendous base to grow. And I think the people we've brought in are tremendous. And in a market where it's really difficult to get good people, I really think we've picked the eyes out of it. The board is as good as any in Australia, literally. And I think that creates options for us, particularly with the share register we've built and continue to build out. So, I'm really optimistic about what we can do with this platform. That's why I joined. And, we're excited about that. Pound for pound, I think our management team, in terms of the size of company we are, really is, exceptional. So I love to think we can leverage that human capital. We can leverage the asset base we have, the exploration we have, to achieve something great here with, no pun intended, with Greatland.
Okay, that's it for today. I'd just like to thank Shaun Day, Managing Director of Greatland Gold, for joining us as ever. It's been a terrific day. Hundreds of shareholders have joined us. I have to say thank you individually to each and every one of you. The questions have been great as ever. It's been a terrific session, and that's it. And if you are lucky enough to be going along tonight, we shall see you. Look forward to seeing you at 6 o'clock. And if not, have a good evening. Thank you so much.